Good morning. We are live from Nasdaq's offices in Lower Manhattan for this Thursday edition of IR Insight Live. I'm Michael Spector, your host for today, and I'm joined by Jason Peters, Senior Analyst on Nasdaq's Advisory, Financials, and Real Estate team. Jason, thank you very much for being here.
Thanks for having me.
So today, Jason's here to talk about real estate, but as many of you know, tonight kicks off the NFL season. Right. So we have the Eagles of Philadelphia squaring off against the Falcons of Atlanta, and I'm curious to get your opinion on what we're going to see tonight.
Well, most people are probably going with defending champions.
Right. I'm one of those people.
Week ones are always kind of tough. I do think that things might be a little shaky in Philadelphia. I mean, we do have Foles starting Super Bowl quarterback.
Right. He won a Super Bowl.
Champion.
Right.
I just want to give a slight edge to Matty Ice and Co down there with Julio and those guys.
The veterans.
Yeah.
And they have a very interesting rookie with Calvin Ridley.
Yeah, like him. Drafted him too.
Yeah.
Yeah.
It'll be interesting to see what he does. I'm going to go with the Eagles. I think defense wins games. I think they've added some very talented pieces there in the offseason. I think the defense is going to pull this one out for Philadelphia.
Defense, good team.
It is we're talking about real estate. Real estate is a defensive pocket of the market, so Correct. It's a really interesting segue. So can you just give us a quick rundown on what you've seen so far in real estate in 2018?
Sure. So far in 2018, REITs kind of got off on a bad foot. 1Q was pretty bad, but they did regain some ground and posted a nice, quote-unquote, parabolic move in second quarter, posting with the RMZ posting nearly 9% gain. And some of that's kind of continued into 3Q, where we have, had some about 3% gains in RMZ thus far.
Yeah. Okay. And with that performance, what have we seen in terms of investor rotations? Are they buying into the strength, or are they selling into the strength?
Sure.
Have we seen any hedge fund activity? Have we seen anything else?
We just recently had a fresh look at the 2Q buyers and sellers, if you will, with the 13F flash. Again, those are all as of 6:30. So in 2Q, a large theme, especially across the industrial, retail, and lodging, hotel space, was M&A.
Okay.
So we did see a large amount of hedge fund trading within those subsectors.
Event-driven, ARB usually follows.
Correct. Okay. There was a large presence of hedge funds coming in, kind of, I would say, looking for the next hot M&A name within the space. So that was a large theme. We also looked at a lot of the other larger sector rotators, the quote-unquote REIT mafia.
So who as an example?
Well, we could be here all day if we wanted to talk about all of the REIT mafia and all of their holdings and everything. But just some broader themes when looking at three of them, those being Cohen & Steers, Invesco Advisors, and Fidelity.
All right.
Cohen & Steers was actual for the second quarter was a net, in terms of market cap, they were a net buyer. Okay. And one key theme that we've looked at across all the buys and sells from Cohen was their exposure, increasing of exposure to the healthcare space.
Okay, that's interesting.
They put a lot of money to work in the healthcare space.
Okay. Which could be, it could be a number of things. It could be driven by the sector's pullback with yield back up. It could be being as healthcare is one of the more defensive property sectors based on lease duration.
Correct.
They were one of the sectors that got hit the hardest with this yield back up rotation away from real estate.
Yep, that's correct.
So they could be seeking value in that sector. It could be the secular trends with an aging population and with exposure to skilled nursing and assisted living.
Yep.
So that's interesting. How about Invesco?
So Invesco, for quite some time, has been a net seller across the space.
Okay.
But one of the bright spots, I would say, or themes from Invesco was actually them increasing exposure to healthcare as well.
Really? Okay.
So that's two out of the top two of the top big rotators that were increasing their exposure to healthcare, to the healthcare space, which is quite interesting. And in terms of Invesco, we also did note that they were quite bearish on residential names and as well as infrastructure names.
Sure. Okay. How about Fidelity?
Fidelity, interestingly, was a net seller in terms of across the REIT space. Looking at in terms of market cap, more so than Invesco.
Okay.
But one of the key themes there was their bullishness or the amount of buying that they put money to work.
Sure.
Across the retail space.
Okay.
Which again, I don't know if it has anything to do with with the M&A there. I don't think so. That's more of a widespread,
Right.
subsector purchase.
It could be just piggybacking or seeking value in retail's big comeback, right?
Probably not piggybacking, but you tend to think people piggyback them.
Right.
But yes, you're right.
Okay. Going forward, what do you anticipate seeing in the back half of 2018 and going into 2019?
Well, everything seems to kind of be running the same course as we've seen over the past couple of months. So if we continue to see that, we'll have another rate hike. But the Fed has been really consistent, or potentially 2 more rate hikes. The Fed has been really consistent with their messaging in terms of future rate hikes, which has boded well for REITs. They don't like surprises, nor does any other arm of or sector in the market really like any of the surprises. So that probably is not going to impact us as much as one may think, though we obviously will likely get those dips on the days leading up to the rate hike, but it's generally an overreaction, and we have seen thus far all along. Really, we do have some recovery in the days post the rate hike.
Sure.
That, and if we have a continued amount of M&A, that's going to bode well for the entire sector.
Sure.
So that should really be.
And we could see a cause and effect thing. One theme kind of plays off the other.
Sure.
If we have a sell-off amidst yield back up, it could continue to create this gap between public market valuations and private market valuations, which opens the door to future M&A.
And you're still going to have the rotators rotating within that, looking for value, as always. So. Lastly, we do have the heightened trade war talks. So if we do ever enter, some quote-unquote full-blown trade war, REITs, given the defensive nature of them, then that could bode well for them too. We could have some continued sell-off of tech names and potentially financials, industrials, all searching for somewhat of a safer investment. That being REITs. So that could bode well for REITs.
Unless there's just a sell-off across the entire
Unless
board.
It's tremendous macro theme, total risk off. Then that's not going to help anyone. But like where we are.
Okay. Thank you, Jason. Thank you so much for that wonderful insight. Thank you for being here. Thank you all for watching us on this Thursday edition of Nasdaq IR Insight Live. Please join us next Tuesday for another edition. We'll catch you then. Take care.